Hello everyone and welcome to Pearls of Fisdom on Nirmal Bang. I'm Avan Dabash. Well, today we put the spotlight on none other than the most awaited IPO, I'd say, this year. I'm talking about the Indian food and grocery delivery giant Swiggy, which filed for its much awaited IPO via confidential route just a short while ago. They've got the shareholder approval to raise $1.2 billion. It's a 10-year-old startup and it's a very hotly contested space between it and Zomato. So let's understand the dynamics of the food delivery space, what this means for Swiggy and Zomato. And to discuss that and lots more, we've got Akshaye, Jalan, founder at Xume, now joining in. Akshaye, thanks so much for being with us. Finally getting closer and closer to that much awaited IPO. How much have you been waiting for this blockbuster to come out? And let's just talk about what it's really going to do to the space as a whole, because arch rivals, if you will, the two companies, Zomato and Swiggy, how do you see the IPO changing the dynamics?
Well, I think we've all been waiting for the impending inevitability of the Swiggy IPO, and I think it's been in the making now for a couple of years, and we're all excited both in the food delivery space and the food tech space to make this happen. And I think what's going to now start happening more than ever is it's going to put the spotlight firmly on what happens next, because the food delivery industry or the food tech space has been focusing so much now on customer acquisition. I think after a very long time, they've got the user base, they've got some use cases, they've been able to test the model. And like you rightly mentioned, there's a duopoly in the food delivery space. But the one space that everyone's really talking about is the quick commerce space, where there are more than two players. And I think this IPO and a lot of the cash that Swiggy is going to raise through the IPO is going to be divvied up between both the battles, right? The food delivery as well as the quick commerce space. So it's going to be very interesting to see what happens in both these areas.
No, it certainly will. And I just wanted to understand from you what the dynamics will be when it comes to market share. Is it going to be a fight for market share, or is it market going to be large enough that it's not really going to be each one eating into each other's lunch, if you will?
So I think the fight has already begun. The claws are already out. And I think the change in market share over the last couple of years is testament to that. And I think Swiggy's got a little bit of catching up to do. I think Swiggy slipped a little bit over the last couple of years. Zomato has marched ahead. But I think with this new cash infusion, Swiggy's going to do two things, right? One is it's going to protect its fortress, which means make sure that it doesn't slip further, and also start endeavoring very hard to try and claw back the market space. And again, the market space is being fought, or the market share is being fought across both verticals, the food delivery and the quick commerce. In the food delivery space, Swiggy is about 7-8% behind Zomato, whereas in the quick commerce space, they have Zepto now, which as per the latest reports, they've actually slipped behind. So you have Blinkit, which is Zomato, then Zepto and Instamart. And funnily enough, Instamart was the market share leader at about 50% a couple of years back. So I think on both those fronts, it's going to be interesting to see what happens next.
Oh yeah, it certainly is. And given that you're talking about the battle having begun between both of the companies, let's talk about who reigns supreme on different parameters. A, when it comes to market share, and B, gross merchandise value, or GMV, which is a very important metric when tracking this space.
Yeah, so like I said, Zomato has gotten the better of Swiggy on both those parameters. And I think what's been disheartening from a Swiggy perspective is the change, right? Being a category leader to now second in the totem pole. That's not a good thing for any company. So I think a lot of what they're going to do is going to be to try and address this. And I think, if you really look at the bottom line, and if you really look into what's been happening, I think Swiggy had a massive head start, because if you look at historically, Swiggy has always been a logistics company. They've built the operations and then they've fulfilled. And then they've said, okay, what can we do next to optimize what we have, which is our logistics, which is our distribution prowess. Zomato, on the other hand, started off as a consumer application company where they were putting menus out, and then they kind of figured things along the way. And their focus has therefore been more on the consumption, the consumer facing aspect versus the logistics, and that they've kind of just put together primarily with acquisition, and some of it obviously internal as well. So I think both companies have got very different DNAs, and it's led to now a very interesting battle. And I think both companies are trying to reimagine themselves, and therefore the next 6 to 6 years is going to be very interesting. I think the biggest shock for me was when I was looking at the GMVs across Bengaluru, which happens to be Swiggy's erstwhile stronghold. It's also where they're headquartered at. I mean, Blinkit is actually beating Instamart in Bangalore, something that was considered unfathomable a couple of years back. So it's kind of interesting the way the dynamics are shaping out. And like I said, with this new cash infusion, I think Swiggy is going to have to do a little bit more than what it's currently doing to keep the market share dynamics going.
Okay, and if we were to just talk about the overall, results, and if we were to talk about, what the outlook is when it comes to the quarterly performance, and not really quarterly, but the financials, and how Swiggy has been performing in terms of their overall revenue, and putting profitability in the spotlight has really been a key metric when it comes to the recent listings as well. How are you looking at the financials? How is Swiggy placed?
So I think Swiggy, was playing the customer acquisition game, as was everybody in the industry. And I think of late, you've been noticing across the category, there's a lot more concerted effort and focus on the bottom line, right? On the EBITDA. Everyone's talking profitability now. Everyone's talking, what can I do for the business? And I think Swiggy's also learned a lot of lessons from Zomato's roller coaster ride post IPO, how their share price crashed and now it's suddenly reversed because on the back of some really good earnings. So I think what Swiggy knows what it needs to do to weave a good narrative. I think that's probably why they pushed the IPO back by a year or so they could kind of get the team really concerted and really thinking strategy for execution for profitability. And I think you're going to see a lot more measures come out of Swiggy, and they've also done a lot of house cleaning when it comes to some costs. So I think over the next couple of years and especially a couple of quarters post the IPO, the emphasis is definitely going to be more on the profitability or the EBITDA performance.
Okay, let's discuss the Instamart versus Blinkit, and what has really been the performance of these when it comes to the GMVs, if you could just touch upon it. And does Blinkit have an edge?
So currently it does, all right. The last market share report actually saw Instamart drop from 52% to about 28-29%, which is a massive fall. Blinkit currently is at 40%. And then you have Zepto, which is the new entrant, which really changed the dynamics of quick commerce and brought 10 minutes deliveries to India. They're now allegedly number 2. I say allegedly because there are contrary reports to that. And Instamart is slipped to number 3. So I think what has to happen is Swiggy has to focus on not only building more dark stores, something that they've indicated that they're going to be very focused on, but also move out of Bangalore into other metros. Because I think recently most analysts thought that quick commerce was a function of maybe the top 10 metros in the country. But now you're seeing demand come out of more than just that. Also, what's been very interesting to see is that on special days like Mother's Day just recently saw a lot of other non-grocery items being delivered, being ordered and demanded and fulfilled by all 3 incumbents. So I think it's not just a matter of now throwing out more dark stores, but it's also a matter of getting their inventory correct. It's also a matter of getting the delivery schedules correct and targeting customers around a certain radius, knowing that there are going to be more stores within a certain zip code. So I think all of those factors are going to be very, very interesting and are a huge part of all 3 companies' future plans.
Oh yes, it certainly will. And I just want to understand when these companies like Zomato and Swiggy go ahead and raise the platform fee, we have seen instances of that. How does it really help to improve unit economics? How do customers perceive it? Is it going to be a norm?
So I think the beauty of what they've been able to do is they've been able to prove the hypothesis that convenience trumpets everything, right? And because India today is happy paying a little bit more for convenience, they don't mind paying an additional rupee. So it's not gone from 2 to 5 when one fell swoop. They've been doing it very sensibly by increasing it by a rupee every single time. And when one does the math, if I'm ordering something worth 400 rupees, paying an additional rupee to get it delivered to me with a click of a button is acceptable. There is going to be a glass ceiling at some point. A lot of analysts peg that at 10 rupees, but from 5 to 10, that's a massive number. And if you think about the number of orders, Blinkit mentioned that they're doing about 6 lakh orders a day. When you do 6 lakhs times 5, that's a 30 lakh bottom line addition just to Zomato. And that's a massive amount of money that they can earn. Now, what's also happening is because they're adding more SKUs to their selection, they're also trying to get the average order value or the AOV increased, right? Because they're throwing in a few more high-ticketed items that the non-grocery sector typically brings, be it in personal care, be it in electronics, be it in other miscellaneous products and services. So I think overall, what's happening is that they're being able to increase the operational efficiency. They're being able to charge a little bit more in terms of their service, and also try and nudge the customer who is now loyal to the idea and the notion of buying online, of transacting online, by saying, hey, listen, we're going to offer you a little bit more. So therefore, why don't you buy more with one order or with one purchase? Because that's where the huge operational saving from a logistics and delivery perspective also comes in.
Okay, and how are you looking at the exponential growth for the online food delivery market? How do you think these companies should really capitalize on the growth? Is there room for more players?
So more players at this point might be hard. You have ONDC coming in, and even they're struggling, right? Despite everything that they have going for them. I feel that, the CapEx costs and the logistics costs and just people now being comfortable with the Swiggy Zomato duopoly, I think is a huge advantage that both these companies have. I'm not saying it's impossible, but I think players are going to come in and offer niche services, personalized services, rather than try and reinvent the wheel or try and even mimic or be a third cog in the wheel. Sorry. So I think that's going to be hard to do. But I definitely feel that food delivery is growing rapidly. I think if you look at the numbers that China has versus India versus the US, India is still far behind. I think there was a report that I read the other day, it was a Macquarie report that said the number of users per month in China was something like 300 million, and India had like a 17 million or thereabouts. This was in 2022. So there's a massive opportunity, because today I see it in the office, I see it at home, I see it with family and friends. Ordering food is simply choosing one of the two incumbents. I don't think many people are trying to do much else. So I think there is an opportunity, and I think they are going to keep capitalizing on the opportunity. I think there's a lot of room for additional services and value add, like personalization, like intelligence. I think Swiggy has just relaunched its daily service, which does home cooked meals, which is again talking about how healthier opportunities to serve an audience that's hungry for healthier consumption is going to come into the mix as well. There's a lot of innovations that I feel the next 3 to 4 months are going to see.
Okay, and finally, what would be your pearls of wisdom for Swiggy before they hit the public market, once they start their journey on the public market? Any 1 or 2 things that you can think of?
I think what Swiggy is doing is fabulous. I think raising money to fight the fight is important, But I think the big thing that they have to start doing is really understand who they want to be and where they want to go with this opportunity, right? Because they've been languishing, they've been slipping. They got to figure out, if I was Swiggy, I would want to figure out, why am I now losing market share? Why am I now losing perception to Zomato? And I think once they understand that, I know they have the answers already. If they focus on the execution thereof, and if they focus on the operations thereof, they will do themselves a huge favor, and the investors that bet on them a huge favor as well.
Okay, let you go on that note. Thank you so much, Akshay, for taking time out and joining us.
Thank you so much for having me. It's been an absolute pleasure.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.